we don't have an inside day and we go red to green, then, we may push up into this, these levels here. This is a good time to make money. That is for sure. Look at this thing. If we go red to green, but the gap is big, right? We're down 20% on these. I think we'll be a little bit more tricky. So, good morning, everybody. I think that we just got to be a little bit careful today in terms of the range. So let's take a look at the general market. We've got a small, I wouldn't say small, it's a 3.5% gap. So we got 3.5% gap. The key to today is going to be if we hold into yesterday's lows. Yesterday felt like a little bit like capitulation, meaning like, when you have like a big flush in the market, at some point, rather than it just like fading down every day, you want to get like that feeling where you want to get that feeling where like they just throw the kitchen sink out the window and just say, fuck it, I'm out. And that felt like yesterday we were down 3,000 points on the Dow. In my years of trading, I haven't seen like that big of a number. We may have had percentage moves like that before, but I doubt it. Like I really do. I don't remember one that was, so like if you look at the Dow Jones, 13%. I don't remember a day like that. Ever. So, what are you going to do? That could have been the capitulation day. We are at some supports here. If we look at the QQQs, we're at the June bounce spots, the June-February bounce spots from 2019. Now, that doesn't mean shit, right? We all know that. But supports mean very little when the markets are, obviously crashing. But they can serve as some guides as ways to manage risk. We're in that zone where we should be bouncing. So how I'm going to look at this, I can't chase any gap up. I can't chase any gap up in the market. So today we'll be gapping up 3.5%. This market has punished people for chasing gaps. See this big gap here? Punished. If you chase any spike, punished. We've seen like these kind of early morning gaps, and they have been faded off. We've seen this like quite a bit during this run. So I don't trust any 3% gap. It's a big gap. In a normal market, if we saw even a 1% gap in the market, right, we'd all be complaining like, fuck, the range is gone for the day. A 3% gap is a lot. Now, because of the volatility, we can still have a 3% gap and have more room to run because the 9 EMA on the like QQQ is at 193. So you have like 20 points still before you're even at the 9 EMA, the short-term nearest level of resistance. So we have upside. So the game plan for today for me is I'm going to watch this first dip in the market. I don't plan on chasing it up because, we haven't been rewarded with buying any strength in this market. So as the gap comes back and fills, maybe half of the gap, I'll start to watch on a 5-minute chart and a 15-minute chart on the QQQs and the SPY. I will watch at the 9 EMA and the 20 EMA. Start looking for some supports. Usually we come back and fill about half the gap. If we start to get some traction and we start to round, so I'll need a couple candles to hold. And then if it starts to curl back towards the VWAP, then I'll look at potentially long it is. So like how I would want it to look is like something similar to this. Like if you see here, like this was a big gap. This was 10, this was like 3, 4, 5% or so. And then like you pulled back and you started to round. That way I can manage my risk and then I can take the trade. Now, granted, the fucking market faded the whole thing off that day. But if we're going to try to long something, that's the particular look that I want to see. In this market, it does not pay to chase. We've already seen that. It doesn't pay to chase. And we've learned some hard lessons, right, from believing the market's going to bounce and then it doesn't bounce. Like, I don't know if anybody has been just like caught up in that, but like it happens some days, right, where we've conditioned ourselves to think, okay, the market's going to bounce, and then it doesn't bounce, and right now you're flipping it back and forth. So that's going to be the play. I'm looking for that first dip. If it holds, we'll take some risk on to the long side, and we'll see what goes down. If it doesn't, and we just fade the gap, I have no problem getting short this market. I don't like shorting the market when it gaps down like 1,000 points, 2,000 points, but I don't mind shorting the market when it goes green to red, meaning it's up a few percent and then it rolls red. That type of play has been working really well in this market. So let's be just kind of mindful of these levels. If you look here, there are some stocks that have some PRs out today. Like this BMTX is a biotech company. It looks like it's got some, let's see what the news is on this bad boy. My one worry with this is going to be liquidity. So first of all, this is a nice chart, so no getting around that. I'm not trusting any 50% gap up in this market. Meaning, like this, normally, this is the exact type of pure momentum stock that we would want to be playing in the bull market. It's a recent IPO. Its float is tiny on this thing, right? So you got a float of 50.6 million shares. Quarterly revenue growth of 40%. So it's a fast-growing company. Those are the type of stocks that we want to be longing, even on big gap ups of 50%. Because it's a bull market and momentum begets more momentum. I have a trouble. I don't know. I can't chase this thing up 54%. So this, if you want to play something like this, because that is a setup we do play, these kind of earnings PR plays, I'd really wait for like a deep pullback and then see how it acts. You can use yesterday as like a guide. See like yesterday how it gapped up and then it like pulled all the way back. It pretty much pulled back like half of its gap. And it started to get some traction around the 920 EMAs. And you started to like build some real support here. And then like towards the end of the day, you can see, so this is at $39, right? Towards the end of the day, it does a VWAP sizzle. VWAP sizzles when you break over the VWAP, but the 9 EMAs right up under, right? It's very powerful. You get the sizzle and then a flag and then a go. So, in the end, like you pop like $13, $14 from here to here. But like you have your risk is much more managed to try that kind of long versus trying to chase the gap up at the open in a market where everybody needs liquidity, right? This is a liquidity-driven market, meaning people, when they see green, they're selling it so that they can get some cash. People need money right now. Banks, hedge funds, mutual funds, day traders, everybody needs a little cash on things that they're down on. They're selling these things. But if you start to see like this is like the best way in a shitty market to try to long like a heater, to try to long something that's got a PR out. So your plan for today on this BNTX, if you want to put an earnings play like this on your watch list, don't chase it up at the open. Let that thing pull back. Let it marinate a little bit, and then you can manage your risk. You've got to build out levels. In this market, with so much selling going on, you have to have the ability to really build out levels so that you can trade around, so that you can limit your risk. Like things like mRNA and stuff, like these stocks have like PRs out and stuff. But like this is like, you can trade stuff. You can trade hot momentum in this market if you see it in some of these biotechs. But like you really need like clear spots. So like you don't want to chase any gap up. You let them pull back and start to hold and then build out some levels. Now like you can come in and really kind of take this thing, and catch it like a nice shred. But let these things settle. Like in the hot market, we like chasing the first candle. Like say a stock breaks over pre-market highs or something like that usually works. Not right now, not in this kind of market. So just something, to kind of, something just to chill about. This Codex has a PR out, it looks like. It's popping up here. It's only 8.2 million share float. Look, if you like these kind of small caps, you can totally roll with that. Man, I shorted the shit out of that one, Eric, yesterday. You late to the party. Yeah, you can add this to the watch list if you want. This stock is a pump and dump stock. It runs for a day and then it just collapses. You have a big day and it collapses. So you have to keep that in mind. If you want to play a small cap stock, like this one's it's got probably some kind of momentum in it at some point today, but you can't chase this one. So I would let this one also, let it pull back at the open, let it marinate, and then you could take a go at it. Good. You can go in mRNA. Hey, so this mRNA, you got a spot at 30. If you start to bust over it, so check out more like an hourly chart. It's not 30 on the dot, but there's a little bit of a fudge factor involved in this. If you look here at this 30 spot, it's popping up a little bit today. This is a biotech company too. You got almost 1 million shares in volume, which is quite a bit. If you can start popping over 30 and it starts to marinate there, I think that this one may have a chance. In a shitty market where things are fading, biotech stocks will still kind of move on their own because they're more driven by PRs and press releases and things of that nature. So this one, it has a chance. The key on this one is I want to see it develop a pattern above 30. If it's under 30, I don't want to do it because that 30 is going to act as possibly resistance. And I don't want to, say you see a nice pattern, you see some kind of ORB pattern or something like that. If it starts to marinate and it starts to look like it's going to go, but it's under 30, that 30 may act as resistance and then it could just knock it down because you don't want to chase any, huge gap in this market unless you have, unless you just have a really, really easy play on it. So I think that this one looks fine. I would add it to the watch list today. I'm mostly going to try to trade market ETS for the most part, but I think this mRNA does have some juice. So I would add that to our gapper list for today. As the market starts to settle off, we can start adding back regular stocks. There's no point of doing it a lot right now, but they're starting to go. You're starting to even see a little bit. This RCL's popping up a little bit today, 6.9%. You're starting to see a little bit of rounding on this one. If you look here on the hourly chart, this 30 spot's been holding for 12, 13, 14, right? 4 or 5 days. So as this thing starts to really really start to push, now, if you see here, this is the 20 EMA. Notice how, this hasn't broken over the 20 EMA on the hourly since it was at 80 bucks. Interesting, right? It hasn't broken over since 80 bucks. Now the range is getting tight, and it's getting tighter. It's getting tighter. If you break and hold over here, you have some upside on this one. This thing has been demolished since 140. It looks like they're probably going to get some kind of, bailout or some shit like that anyways. Hey, where's our bailout? Ain't that some shit, Banks get a bailout. These cruise lines get a bailout. If they're going to get Carnival Cruise Line bailout, I'd like some free money too. Shit. I mean, they got shitty pizza buffet and shitty service, and they get free money. That just ain't right. That just ain't right. Out of, patriotism, we should be shorting these pigs, but they've come down such a long way that, that play is probably over. So now we just got to make a little bit of money. So we'll keep an eye on this one. At some point, it's going to squeeze. But watch that 20 EMA out. You want to see a candle completely hold over it? on that hourly, but this thing is coiled up, man. It's coiled up and it's tight. Yes, yes, yes. I'll be in the chat room all day today. Yeah, I'll be in the chat room all day today. Yes, Miss Priceman. Carnival Cruise Line Pizza Buffet? Come on. Maybe we'll have a Bulls on Wall Street Carnival Cruise Line get together. I don't even think they got Wi-Fi on those things, though. There's another company I've been eyeballing now for a longer term trade. I keep an eye on this Squarespace if it starts to get a little bit of traction. This is like another one that's been really decimated. It's been cut in half the last few days. I mean, only in like the last 3-4 days, really. But I'd watch this one too for a little bit of marination. This one's been like a hot to trot for a long time. But I think we may get a couple ads in some of these bad boys. This Carnival Cruise Line is very, very similar. You can see here, you've been building out a base on the hourly since the 12th. So we're on the 17th, a good 4 or 5 days. If we start the curl, now let me just tell you something. There's a good shot that it could also just, if the market keeps getting smoked, there's a good shot to just break under 14 and die. That can happen too. Why? These companies have high debt on them. In bear market trading, the companies with the highest debt get faded off first. Why? Because nobody's going to visit their store or using their product or service or their cruise. And they have billions and billions of dollars in debt and they have no income coming in. So they lose more than other stocks. It's like traders on a day trader on margin. A day trader on margin, when the market is hot, what happens? He makes double, triple, quadruple his gains when he's right because he's using margin. But when he's wrong, what happens? He loses double, triple, or the whole thing because he's on margin. He's using somebody else's debt and then he's losing, so you lose twice as fast. That's what's happening with these cruise lines. And also with these casinos, these are high debt instruments, so they fall the most. But I think there's a couple of these that I'm just watching for longer term trades. But the key is going to be on the hourly charts. I want to see some type of constructive action, break over, you can see here these 20 EMA still been getting faded off. I want to see kind of that break and hold. This thing was $35 here. At $10, we're due for a bounce on this thing. This MGM, I would flag this even for potential day trades. If it gets another wipeout on this, it was down 33% yesterday, we're going to get a potential long on these things. So RCL, MGM, and we got mRNA. I would keep all these on watch as potentials for longs today. All right. Let's look at some ETFs. So, we've been trading mostly ETFs the last few days, and that's been awesome. But if the market does go, this TVIX, was $43. It's at $600. Right now it's at $660. If the market does go, the 9 EMA on this one's at $300. We'll take this thing potentially short for a trade. I will say that this particular ticker is a widowmaker. It's a widowmaker, meaning you could have 20 shares of this thing and it could spike out of nowhere and rip $100. So you have to be careful on this. At this point, the trend is higher. So you can see here, it actually makes for good longs. We would only look to short this if the market starts to push up high, because if you short this, you're betting on the market to go up. Okay, you could use UVXY too. You can see this thing's at $90, was at $11, so it's up 900%. That's a lot. So these volatility instruments at some point will die down. The question is when, And frankly, they are widow makers. If you short them early, you can get smoked. So you have to be very, very careful. These type of instruments are frankly not for anybody, I'd say, with less than a few years experience. Unless, you're trading with somebody that has experience, that's kind of guiding you or whatever. There are just easier things to trade. There's things that are tough to trade, and then there's things that are easy to trade. As a new trader, you want to find liquid names that just move clean and that have a little bit extra volatility compared to the market, but you don't need anything that goes gangbusters, that moves around 100, 200% a day, because that's a widow maker. That's an account blow up. That's something that, is very hard to control. Like even something like this, even for myself, like I've been trading like 300, 400, max 600 shares of this at a time. Where like in a slow market, I would be trading 2,000 shares of this, so just kind of something to be mindful of. So watch list for today. We got these three names. We got UVXY, TVIX. JNUG had a 100% bounce yesterday. The 9 EMAs on this at a 32. I'm only interested in this thing if it goes red to green. Meaning if you see here, look at this thing, man. Is at $3. Got all the way up to $10 at the close. But it's gapping down about 20%. If it starts to creep its way and it goes red to green, I'll look at potentially playing this for a day 2 play. Okay? You can do Nugget also if you want. Nugget is a little bit more liquid. It trades a little bit thicker, but it's a little bit more liquid. This Nugget trades like AMD, where JNUG trades like Roku. It's a little bit less. It's got a little bit more heat. So just something to kind of be mindful of. Hey, Anshul, SPXL is just an ETF for the SPY. So if the SPY goes up, XPXL goes up, I'm pretty sure. Or one of those. It goes down, up. So it looks just like everything else. This is like you need a market bounce for this. This is a market ETF. You can already see this thing's fading off. The key on this is like you got to see this thing. If it holds 22 and builds a pattern, then you're good. If it breaks under, then you're out of luck. You're out of luck. It's like now the next leg, more selling starts. So we have to be very careful of all this stuff. Yeah, you can have this layout. Hold on. I'll send it to you. Good. Yeah, watch this thing at 22. If it goes, it goes. TQQ will be our main trader for today. The key is yesterday's lows. All right? The key is yesterday's lows. If we come down and test and hold, we may get along. Adam, I was trading in front of everybody the other day, but I do trade in the chat room pretty much every single day. Yeah, we had a hot morning yesterday, man. I had this dust sort of at 16. There's opportunity for sure in this market. So if you're new, you got to take it easy. The best times to make money in trading is when the market is just trending higher. All right? It's easy when the market is crashing to see the volatility and to think like, wow, I could be getting rich right now because there's so much range and so much volatility. But more volatility leads to more shakeouts, bigger stop losses. You can get smoked out on 1 or 2 random trades. This market has tested every ounce of my skill and experience, and it's been fun. We've been making money. We've been doing a good job at the chat room, but it's taken everything I got and then some. Thank God I'm old. Thank God I'm old, but I have been tired. Hey, TC. Is that true? That's amazing. Yeah, even if they're in corporate Liberia, their owners probably hold up in America. Yeah, JDST was a good one to short yesterday too. This one had some nice heat. This type of rubber band setup has been working really well. I mean, think about the range on this. So like if you take this thing on the ORB short, you know, even if you did just like 200 shares, I mean, you could have ripped like 4 or 5 grand on the day. That's pretty sick. Like, you know, that's the kind of range we're getting. So that's a very, very important. Guys, be good today. Remember, there's 2 things to remember about this market. The move at the open has not been the meaty part of the day. The real moves in this market have been happening into the close, post lunch. So like at the open, like you've been more choppy, but it's been later in the day we've been getting more moves. Big part of trading is mental capital. Saving your mental capital and your physical, right, energy levels for when the real move starts. At the open, we've been getting a chop, and then later in the day, we've been getting a move. But what I'm seeing with a lot of the students is we get 2 gangbusters at the open, and then we lose our mental capital, and we get tired. By the time the move happens later in the day, like nobody's around to really take action on it. So we gotta take a little chill pill. Gotta take a little chill pill and get these things going. Only main adjustment is we're still watching all our charts in 5 and 15 minute charts, all right? That's where we want to go with this. All right, let's go make some money. APRN could work too, Big Tasty. All right, let's go make some money, man. Yesterday was hot. I don't know. I'm not anticipating as hot of a day as yesterday, but I think we're going to shred. I'll be on screen share. To the close. I think I was there almost to close yesterday. All right, let's go have some fun. Let's go do what we do, which is the do-do. God bless the United States of America. Let's go do it. We're about to do the Lord's work in the devil's playground.